Okay, so just so I can get the like this into like a small sort of layman's terms. So the Bretton Woods Agreement was essentially set up at the end of World War II to decide to essentially formalize and interlink like central banks like around the world. So in America with the Fed, in Britain with the Bank of England, and then across Europe with the number of separate different like national central banks. And then you're saying that then the decoupling from the gold standard, um, and then further with the consolidation of the ECB around across the basically the financial power of all of Europe has been the reason for the boom and bust cycle that we've seen in economics through the last 40 years. Is that a fair assessment?
Well, I feel that this is the heart of the matter. Yes.
So, and like, just for people who maybe don't quite get what we mean, like, why is all of our power financially centered in, say, the Fed or the European Central Bank or the Bank of England? Why is this a bad thing that we have like a system of like central banks? Like, could you lay that out?
Yes. Well, you have a money that is a political money. The dollar is a political instrument. It is an instrument to maintain the role, the leading role of the United States in the system, which has some good aspects, but it is coming to an end. And so you also have for the national currencies, when you have a central bank, the organization and the supply of money is out of the markets. It is not a market institution. It is a political institution. And so you always have a tendency to over-expansion. You have a kind of ratchet effect. Yes, this is a small crisis. Okay, increase the money supply. Now, when we have a kind of boom situation, nobody thinks about to reduce the money supply. They rarely do that. And if they do that, they fear that the market would crash, as it happened several times over the past decade. In the moment when the central bank tried to squeeze the money supply, the reaction of the financial market was just too strong. Now you have this funny thing, the central banks created the monster of a mega financial market. Now, the central banks, yes, are under the control of the financial markets. The central banks must increase the money supply, because if they don't, you have this mega market crash and many people have their pension funds invested and so on. So it's politically impossible to have consolidation. That is a crazy situation. As they say, something that cannot go on will not go on. It will not go on. It is a dead-end street.
When you say the increasing the supply of money, do you mean things like quantitative easing or fractional reserve banking and this kind
of? It's basically the various phases of quantitative easings that have been made, which is just buying up the bonds in the market. They started with government bonds, and then they went over and even buying corporate bonds. So it is a kind of indirect socialization that has been going on. And with all these operations, the liquidity in the market has been increasing. And where does the money go to? It goes into financial assets, into bonds, and the bondholders get rich by that, but due to the ever lower interest rates. And then after a while, they don't get any money at all because the interest rate is almost zero. So this game has ended. This game is over. Yeah, in the bond market, you invest in the bond market because you have no return. And so all the money goes into the stock market, and even crazier, in the stock market, it goes into a very small number of companies. All these big names that we know, where the private investor, or usually who buys a fund, he looks up, does my investment fund have Google? Does it have Netflix? Does it have Facebook, and so on? Does it have Apple? So you have an extremely distorted situation. Yes, that simply cannot go on. So I totally agree with this assessment. I think many economists who observe or have observed the markets for a longer period of time and have some insight and some historical experience are of the same opinion. Yes, we are approaching a crisis situation. Yes, definitely.
Just I'm gonna put some links in the description for people who are listening. For example, between like after the 2008 crash from 2009 to 2012, the Bank of England actually created 375 billion pounds for quantitative easing. Like that's 6,000 pounds for every single person in the UK. And it's not like we saw anything like that in the pockets of ordinary people. I mean, it was 10 years after the crash, the average like wage for like ordinary people still had not increased at all since the crash. Like it was just 10 years of lost growth, essentially, where the only people who recovered were the very richest in society. Thanks so much for listening. If you haven't already and you enjoyed this episode, please subscribe to this podcast and to our mailing list. And don't forget, my book, Brexit, The Establishment Civil War, is now available for pre-order on Amazon. You'll find the link in the description below. Until next time, thanks so much for listening.